Hi guys, today we're going to talk about cash flow, dividends, passive income, and high yield investments. Whether you're financially independent, chasing FIRE, retired, or just looking for passive income, welcome et bienvenue. But before jumping into the core of this topic, a quick disclaimer for the YouTube gods. All the content here is purely for entertainment purposes. I'm not giving any investment advice. If you're looking for financial advice, please consult a licensed professional. I'm just sharing my thoughts here. So not that this is said, let's get into it. When you're looking for equity investment vehicle like ETFs focused more on income and cash flow than pure price growth, you might feel that US investors are clearly better off than we Europeans are, and that's so true. Of course, in Europe, there are some high yield dividends ETFs, but generally we're looking at 4 to 6, 7% yield with price performance that's not so good. The strategy is basically very often just holding the highest dividend payers. So overall, not super exciting on the long run. Another solution would be to sell options on stocks we hold in our portfolio to generate option premiums or even use other option strategies. But let's be honest, that requires a lot of time, knowledge, and often a lot of capital, especially if you're doing it across many positions. So instead, let's look into something a bit more interesting for us, called ETFs. This fund not only hold a basket of stocks or track an index, or even sometimes a single stock, but they also sell call options to collect premium, which are then paid to us as dividends or as distribution, and that's what we will be focused on today. In the US, there are lots of asset managers offering this type of ETF. Some of the most well-known include YMAG, Roundhill, Neos Funds, RegShares, Amplify, etc. It's a very competitive business there, but they are also starting to expand internationally, and that's what interests us. Distributing these ETFs in Europe is slow and time-consuming for them because of European financial regulation like MiFID II and UCITS. Asset managers must ensure compliance in nearly every European country where they want to distribute a fund, which means a lot of red tape, hassle, etc. But the progress is being made, and in the near future we should see more and more of these ETFs available because this investment style is growing here too. People want cash flow now, not in X years after selling everything off. And hopefully this growing demand will encourage European fund managers to launch their own versions. So let's look at some of the ETFs we've selected. Most of them are in USD, by choice for me, but of course you can buy them in euros, pound, or Swiss francs if you want as well. But the distributions are very often in dollars, even if the ETF is listed in another currency. This means you're exposed to currency risk. You can diversify across different currencies to soften this impact if you want. Okay, let's dive in and check all these ETFs. We're back now. I'm going to show you all the ETFs. The first one we're going to talk about is YMAG. YMAG is from YieldMax, big tech option income UCITS ETF, managed by an ETF in Europe. We have a distribution rate of more than 24%. It's monthly distribution. This fund objective is to have big tech option income, of course, and it's 6 current income and capital appreciation via investment in tech portfolio. We're going to show you different holdings. You can see there's big boys here: Palantir, Oracle, Broadcom, NVDI, of course, AMD. It's very heavy semiconductor and very heavy tech. So it's very new. It has been the inception date was March 25. The distribution, there are only 5 of them, but it seems to be very consistent. And what seems interesting, look, it's nearly $1, average $1 by month. What's interesting is that, as you can see here, the last distribution rate was 24%. So it's not so much. Here on Snowball, I have the same one, the YMAG, on the London Stock Exchange. So it's in dollar. It's not in pounds or euros. You can see here is a graph with the distribution as we see just before. Always the same, nearly €1, 1.08, 1.7, 1.07, etc. Let's check the graph. So it started only in April, as we said before, so must be careful with this. Mustn't jump into it just now. Maybe we must wait a little bit to see. The total return, which is the performance here, the total return from the beginning, it's not so bad. It's 20% in 5-6 months. So, well, it seems interesting. You'll have to see. The next one we're going to talk about is this one. Oops, here it is. Yes, MSTY, MSTY, the big boy, MSTY. Everybody knows this one, maybe. The US version is MSTY from YMAG. This is the US version of MSTY. You can see the distribution rate, monthly distribution also. It's out from a long time now. This is all the monthly distribution. You know, we're back in March 24. At the beginning, it was very huge. €4 by month, 2.5, €4, sorry, $4. 1.8, 4.1, 4.4, $3, 2.2, $2, 1.3, etc., etc. But there's a downtrend now, and the price is going lower and lower. It has been hit a little bit. So the European version from Han ETF, we also have a big distribution rate. But as what we can see is that it seems that we're immediately in a little downtrend for the distribution, but the price is also going down. So with this covered call ETF, when the price going down, the distribution is going down. It's logical. So we'll have to see how it's gonna go. You can see that it's the ticker for the dollar and the dollar version. It's MSTY. But if you want the pounds, it's not the same. It's MSTP. And if you want it in euro, it's also MSTY on Euronext in France, Luxembourg and Belgium. What else to say about this one? Here's the distribution as we saw just before, and the little downtrend I talk about. And when you're looking at the chart, it's out from the beginning. So it was nearly middle June. And it's already down 35%. Even if we check the total return, it's also down 20%. So, well, I don't know what to say on this one. It's maybe not the best moment to jump in. Wait just a little bit, see if it's not going down more and more, and maybe see what we'll do. I don't know. I'm not investing in it yet. I'm waiting. Okay, the third one, interesting. It's from Rec Shares USA, but distributed in Europe by Han ETF. It's FEGI, Tech Income and Growth ETF. This one is big tech exposure with income. And of course, it's a covered call, of course, multi-distribution. Very new, so only 2 distribution, $0.3 and $0.29 cents. And since then we had August distribution, September, so we're gonna see how it's gonna perform. What we can see is that when we're looking at the holding, it's always the same one, and the tech one, the big tech one, Max 7, Palantir, Broadcom, etc., etc. So very, very heavily tech ETF, more than 78%. What can I say also on this one? I wanted to show you. We're gonna go here. It's easier. Yes. Okay. Always in dollars, of course. Huh? It's so the distribution. Yes. 0.29 cents in dollar. 0.3 in dollars. The chart. Yes. So we can see this bump here, but it's just probably because there's the volume is not so high, so it may occur sometimes when we see this. So the price is up since, where is it? Since beginning July. Well, of course, we're in a bull run, so it's not so hard. The price is up 10%, and the total return with the distribution is 13.25, so interesting. It may be interesting. The other ETF, which is very interesting also for me, it's FEPI from Rex Shares US and distributed by an ETF here in Europe. The distribution rate, the last distribution rate, monthly distribution rate is 26%. So this one is trying to maximizing income from big tech exposure with a fully covered call approach, same as the one before. Same thing, only 2 distribution, very consistently, 0.5859 cents of dollar. The strategy is only around 20 holding. Yeah, I can see it here. Of course, it's always the same one, the fund name, and they want to generate premium income through a fully covered call strategy. So the rate, the yield should be nearly around 20 to 30, I suppose. Well, we're gonna check the graph here. Yeah, here it is. Always in dollar on the London Stock Exchange. I'm repeating myself, but I prefer to be just. So this one, the beginning of July also, 5% for price appreciation. Let's see a total return. It's gonna be yes, yeah, that's it. 10%, more than 10%. The price 5 and total return, it's 10%. It's not so bad in a few months. Let's check just for information. His big brother, which is FEPI from the US, from Rex Shares. This is this is the US version, Rex Share. They have FEPI, API, SEPI, but we're gonna stick with FEPI on the Nasdaq. So it's out from October 23. We can see that the price is down 7%, but with all the distribution, the total return is near around 41%. Interesting. So you have income at 25 yield, and the distribution on, I repeat, on the US version seems very consistently. It's around 115 and 1.8 here, but it was in April dollar, so it's not so bad. Interesting also. Okay, another one, the next one, let's see, it's the crypto equity income and growth. It's CEGI, CEGI. So this one is very interesting, but there's a nobody, my broker don't allow me to get into this one. I'm not sure if all the brokers allow everybody in Europe to get in because of the regulation. We can't buy crypto ETFs here in France anyway. I'm not sure it's the same thing in Europe. Tell me in the comments if you have this problem. We're allowed to buy Bitcoin and to sell Bitcoin. That's great. We have tax on the trade, of course, it's normal. But they don't allow us to buy ETFs holding crypto related. Stupid, but it's like this. So this one, only 2 distribution, seems interesting really, because crypto is about, we're on a hype in crypto. So same beginning of July, 18% in price appreciation, and the performance was the distribution. It's lagging. Yeah, here it is, 22%. So great. Interesting. Only 2 distributions, so let's wait and see. So I was talking just before about Rex Share, or Rex from the US. CEGI, it's inspired from SEPI at Rex Share, US Rex Share. FEPI, and there's also an interesting one, which is AIPI. You can see the name and you imagine what it's about. So that was for the covered call from Rex Share. Now we're gonna go. We're gonna check another ETF from GlobalX. It's the oldest one I know. It's QYLD, based on the Nasdaq 100 covered call. So this one is the oldest, not the best one. The option strategies are not so great. As I remember, they writing calls at the money, so they're taking all the premiums, and everything that is over 1%, they're distributing it. So we have a rate that's nearly around 12%. This is QYLD, English, excuse me, on the London Stock Exchange, so it's in dollars. You can see the return from 1 year, it's minus 7%. The total return for 1 year, it's around 4-5%, not so great. But what we can check here is that here in April this year, we had a bull, let's go year to date, yeah. We had a bull run just after this big dip in April, and you can see that it has never recovered. No growth here, so it's really a pure income one, and I'm not very sure it's gonna stay on the market, even if I'm looking at the auction under management. Yeah, it's huge, very huge. 597, nearly 600 million euros or dollars. I don't know what is it, but anyway, it's a lot of money. But yeah, it's a bit updated, all to date, I can say. Yeah. There's another one, a new one. So it's his brother. It's SYLD, a very new one. This is the same thing. It's an ETF, covered call ETF with a swap agreement. So they're not holding the stock euros. They're holding, as you can see here, yes, the holdings are always the same. It's not exclusively the NASDAQ, it's SP 500 shares also. But there's a swap agreement to duplicate the Eurostock 50 covered call index. So we're going to see what it's going to do. But for sure, when you check the European holdings, ASML, SAP, Siemens, Total, LVMH, etc., there's not going to be so much implied volatility instead of the QYLD and the NASDAQ. So the yield should be lower than the QYLD, but I hope the NAV erosion won't be so much. That's what I'm hoping. So if it's the case, it can be interesting. It's out, let's check, it's out from middle of May this year. Price appreciation 3.6%. Total return, let's check, 7%. The distribution up, only a few of them. We can already see a little downtrend. I don't like that. It's 10 cents of euro, and this one it's monthly distribution and it's euros distribution, not dollar distribution. So, well, anyway, 0.10 cents, 0.12, 0.12, yeah, 0.14 for the biggest, 0.13. So let's wait and see how's it gonna go. This was from GlobalX. Another interesting ETFs for European investors, it's from income shares. So income shares, there's many covered call. They are on single stock indices, commodities, others like the MAG 7 or short-term 20 years treasury bonds. We can see that there's many single stocks. The biggest one also, Tech One, Palantir, MicroStrategy, AMD, NVIDIA, Tesla, Coinbase, Alphabet, etc. I didn't jump in this one. I'm interested in a few of them. At the beginning, when they get out, it was a bit sketchy. The NAV wasn't holding. It was catastrophic. Now it seems to be better. They changed their strategy and it seems to perform better. I'm gonna check this one, for example, which is one of the best one. Of course, it's on NVIDIA. So let's go here on soft. On Snowball, it's better to check it. Okay. So we have for NVDI, which is on the London Stock Exchange in dollar. I'm not in pound. I'm in dollar, but you can. Sorry, where am I? You can get it on the. If you want it in pound here, you can get it. It's NVDD and not NVDI. Or if you want it in euros also, you can have it. So well, I'm in dollar, I told you before. So let's check the price. It's nearly down 15%. and it went out nearly half in a year now, not exactly, but a bit less. What about the performance? We can see it's up 28%, so interesting. That's what we were looking for. Distribution and not so much NAV erosion. The price, what we can see is that it was down during the little bear market we had in April, June, and it has, let's say, year to date, and it has recovered a little bit, not so much, but well, in 6 months duration, yeah, we're in April, yeah, we're up 13%, so it's not so bad. The distribution of this one, it's not very consistently. You can see the biggest one is nearly around 0.6 US dollar, and the smallest one it's 0.06 cents of dollar. So wow, there's big difference on the distribution, but well, it's income. It's not necessary to rely on this one for your retire, but why not to have it in your portfolio? So another one which is very well known from JP Morgan Asset Management, the JEPQ, based on the Nasdaq also. So this one, the Nasdaq Equity Premium Income Active UTS ETF. So first thing you can see immediately, action under management, it's $2 billion. So it's very, very huge. And we can see that there's a distribution announced on the website. We have the same one for JEPG, which is JP Morgan ETF covered call also, but not on the SP 500 or on the Nasdaq 100. It's more a global equity premium one, on like a world ETF if you want. I think there's nearly 250 holdings or something like that. Let's check it out where it is, where we're going. Yes, number of position 241. The distribution of the dividend, let's go on Snowball, is better. So I was on JEPG, so let's go on JEPG. London Stock Exchange. Okay, I'm here in dollar always because there's many versions of this one. The overall price is up from N23 to today, so nearly one and a half year. It's small, 5% up. Total. Oh, sorry, I'm lost. Up. The total return, yes, I'm sorry, guys. Up, a bit tired. Total return, it's 20%, so not so bad. What we can see, it's something that is interesting. From year to date, after the little crack we had here in April, it didn't recover so much. It stayed flat. When you compare it to, for example, let's say JEPQ, but not the London Stock Exchange one, the same one in dollar. We have to compare things which are comparable. Okay, this one crashes more, of course, but you can see after there's a bull run, it's okay, it's coming up. But this one, JEPG, no, it's staying flat. So it may be something interesting when there is volatility in the market, because it's going to be a small hedge. I'm saying hedge, you understand what I mean? It's not going to be so volatile. So let's check the distribution, because it's also one of the oldest from JP Morgan. So, well, interesting. There's a difference, of course, but it's the principle with covered call. And when we check JEPQ distribution, so this is JEPQ, the price, it's something, and the total return is another one, so 12% from when? Nearly 1 year, November 24, not so bad. The dividends, the distribution also, yeah, biggest one, very interesting, 0.26 US dollar cents, that's interesting. The last one, which we're gonna have in a few days now, it's 0.17, it's one of the lowest, with the one in March 25, but well, anyway, take it, huh? So I wanted to also include JEPI. I didn't show you this one on the JP Morgan page, but JEPI from the London Stock Exchange in dollars also. same story, you know, it's flat after the bull run, it's staying flat, so well, not so exciting. And let's see the total return. Not so much from when it is. October, 1 year. Okay, the distribution are here. You can see same up, a bit of volatility, not consistency, but it's the principle. Okay, well, so let's check another one, and one of the last one. It's not the same as the others. It's from BlackRock. It's WINC, W-E-N-C, eShare World Equity High Income ETF. This one is not monthly distribution. It's only quarterly distribution. So not exactly the same one, but I thought it was interesting to show you this one. I discovered this one very earlier. And you can see there's a bit of net asset under management. So $150,000 million. That's not so much. That's not so bad, sorry. There's also 343 holdings, so it's a bit of the diversity, so it's interesting. And what I wanted to show you, yes, here it is. Tac. So this is the price from the beginning. The beginning, it was launched in March 24, so now we have 1.5 years of history. The price return is nearly 11-12%. The total return is 25%. Interesting. And what we can see immediately with the price return, let's be a year to date. Yeah, we had a big dip here, but immediately it has recovered, not totally, but it has recovered in an interesting way. And when you compare it to the JP Morgan one, up JEPG, up London Stock Exchange in dollar also. So let's make the same comparison. Yes, interesting. So you can see the purple line is JEPG and the blue line is WINC. And after the dip, you can see immediately JEPG stayed flat. And WINC was hit harder, but it has recovered and is outperforming JEPG. So interesting one, maybe interesting one. But the dividends, as I have shown you, here it is. It's only quarterly, so well, it's 0.17 cents in dollars, 0.10, 0.13, but interesting one, and may jump in this one. Since okay, so I just wanted to show you something else. I was talking about MSTY, you see, the American version. So we talked about MSTY, the European one, and FEPI, the European one. Just a little chart here. I'm showing you the US ETF ones, so no confusion, it's not European ones. But this is the total return from, it was in September 24, so now we have 1 year return, okay. And what we can see, we have the benchmark SP500 on total return, YMAG, FEPI, JEPQ, QYLD, and JEPI. But I repeat, it's the US version. But check the MSTY one. It's crazy. Look at this. The other one seems to be flat in front of MSTY. Even if now, since June, July, we're in a downtrend for MicroStrategy. But this covered call ETF has really distribute a lot of money, and it's very interesting. So that was just a little check. I wanted to put an eye on MSTY. Okay, now let's sum up what I wanted to show you. This is the portfolio that I sum up a portfolio with these ETFs that I talked about. This is my income portfolio. I'm checking this ETF. I'm holding a few of them, not all. I may jump in others. There's also a few stocks inside that I checked because they're income vehicle for me. So just wanted to show you, and I'll make a review monthly or so on this portfolio. It's interesting. What I was talking about, here it is. So there's CEGI, FEGI, JEPQ, YMAG, QYLD, FEPI, WINC, NVDI from Income Share, SYLD, JEPI, JEPG, MSTY, and there's also another ETF, but it's not a covered call. It's MLPD. It's on the London Stock Exchange also, but it's interesting when you're looking for income, because it's MLP distribution and the yield is very high. So, but it's not the purpose, so we'll talk about that another time. And there's also single stock Verizon, a BDC Capital Southwest, agency is a mortgage rate, another BDC ARC, and oil company from France, Total Energy. So what's interesting here is that we can check in one view the yield of the different ETF and stock, the amount of distribution, and what's very interesting is here what we received and the amount, the future payment of this ETF and stocks. Let's check the calendar. Yeah, here it is. You can see in a better way. So this is September 25. The month is nearly finished now. It's in purple. We had all this distribution. I checked this portfolio with a 10,000 investments, $10,000 investment on each covered call. And I put also when it's single stocks, like here, up, Total, and then GNC, for instance, I put $5,000 on this one. So we're going to check what this portfolio is going to give us. As you can see, it's nearly around $150 invested. We're in dollars, so it's nearly about 125 or 130,000 euros. And we're getting a monthly, an annually dividend amount of, it's an estimation, of course, of 22,000 annually. So we'll see if it's growing. At first, I'm not dripping, and I'm just not dripping. That's all. I'm keeping the cash, and if there's a new ETFs or opportunities, I'll put it in. So please tell me in the comments if you have other covered call like this one. We can put it in this portfolio and see how it goes. It will be interesting for me. I will discover other one, especially from Great Britain or Northern Europe, because in France we're limited sometimes, so we can't have access to everything. So with pleasure, show me other things I'm interesting, and we'll share with you, and we'll share it together. So that was a bit long, but I'm sorry. That was this review. So thanks for listening. Okay, so I'm back off screen. That was a selection of ETFs we'll be reviewing monthly in upcoming videos. I will also add new ones over time as they come up. And if you know other interesting ones, please tell me, let me know in the comments. I'm interested in this. Another last thing, I'm sorry, I apologize for my bad English and bad accent. Please be patient with me and excuse me. It's not so easy when it's not in your native language, but everybody knows this. And we're froggies here, so we're not very keen on English, okay? Okay, that's all for today. Thanks for following along my passive income journey. See you soon for a new video. Bye bye, merci beaucoup.